We've been going now since the beginning of the year as Regenesys Investments, and the purpose was really to be able to provide information, education, and knowledge regarding the financial markets in easy-to-understand language that is not intimidating and really breaks down some of the key things we feel are important in the markets. As Regenesys Investments, in addition to the education we provide, we do have specific investment services that we offer. We have CFD portfolios, which are short-term trading accounts. We also offer longer-term investment portfolios and international portfolios as well. In addition to that, we're looking to white label a unit trust, a Regenesys unit trust. So that will give the ability for people who are willing to or who would like to make monthly contributions into an investment vehicle to be able to do that. And the way we operate these accounts is either on a full discretion or a managed basis where we make the decisions for you, or alternatively more consultative basis where we discuss trade ideas and you make the ultimate investment decision. What's also very important to note is our online platform that's available either on your mobile, laptop, or you can hard install it on a desktop for argument's sake. That gives you full transparency into your portfolio, what your account value is, what your holdings are, live pricing, charting, a lot of bells and whistles, which is really key for yourselves as private investors or traders to be able to be equipped to be successful in the financial market. So that's important, and that we provide to you free of charge. And then our other services, our investment courses. We've been running these throughout the year. We do have one coming up next week, Saturday. It's an introduction to trading and investing. We do have a few seats left for those of you that are interested in coming. We start at the very beginning. So what is a share? What is a bond? What are the financial markets? How does money move from lenders to borrowers? And really is a great starting point for those of you that have an interest in financial markets, looking to expand your knowledge, or just want to fill the gaps in terms of what you think you understand about the market. So have a chat to us. If you are interested in joining the course, let me know. Okay, so what I thought we would do is just break down the performance of what markets have done for the year to date, because I think that's important to give us just some clearer understanding in terms of what's driving it. So we've spoken about an index before. We should understand it. The JSE All Share Index for the year is now up around 11%. That was as of yesterday, but more or less the same at the moment. And then if we break that down into sectors, and we'll go into what a sector is in more detail just now, but if we look at the resources, which are your mining shares, they've really led the upside this year, and they're up around 16% for the year. So investors are now starting to be rewarded for their patience in the previous few years where they might have been somewhat frustrated. We've then had the banks as well. Banks have been very, very strong performers this year as well. We've seen continued buying coming into that sector. Some have argued that it's because of the relative affordability, or their valuations aren't as expensive as some of the other shares or sectors in the market. And we got the financials up 7% for the year. Now, what's interesting about that, if you look at our market, is that the previous 2, probably 3 years have been driven by industrial shares. So the likes of some of our bigger dual-listed heavyweights, SAB Miller, Naspers, Richemont that we've spoken about previously, those have been leading the market up until now, and we've seen this year the rotation or the movement into some of the other sectors like the resources and the banks. You guys with me? Great. And then I just thought we keep on stressing the global theme. So let's look at some of the other markets that are important to South Africa. The American market, the S&P 500, top 500 companies in that market, they're up 4% for the year. So we've actually outperformed them for the year. They are at all-time highs last week. And then China's up 5% for the year. Now, this is a good thing because China has really, really struggled for probably the best part of 6 years since we endured the credit crisis. You would have seen our market, and the US market is similar. Since the lows of 2008, we're up in the region of 170, 180% from those lows, whereas China is still 60% below the highs that they were in 2007. So we've really seen a lagging of the world's second biggest economy, and this has a massive impact on South Africa for our manufacturing and for our resource sectors. So just quite an interesting thing to note. I mean, I think China was up 8% in the last 2 weeks. So we've seen some activity and emergence coming back in there. We've seen signs that the manufacturing sector is starting to improve, and that bodes well, being such a large economy, for the economies that trade with it and do business with it. So quite interesting that although things don't feel that rosy in South Africa, our stock market still continues to perform quite well this year. We often say that what happens in the US economy and the US stock market has an impact on Europe and it has an impact on South Africa as we're smaller. I'd like to put in context the size of these stock markets relative to each other so that we can see where we all fit in and where the big players are. So each block represents a stock exchange by market capitalization, which is really just the size of the economy. And the exchange, and no surprise that this big orange block here is the US. That accounts for 46% of the size of all stock markets represented here, which is massive. You can see the size of it relative to everyone else. It really is the big player on the block. And as the saying goes, when the US sneezes, the rest of the world gets a cold. So they have a massive impact. Whether it's their monetary policy or it's their labor market, when we see movements in those effects also through to other economies. And you can now see the scale and the size of that, and why the impact is so profound. The last section I just want to cover, it's one we do every week, is jargon busters. Just to really demystify some of the financial terms that us investment professionals love to throw around to confuse most people. The reality is that the concepts are often quite simple, but the jargon can be a bit misleading. So what I thought is terms you might hear quite regularly. And the first one we're talking about is SENS, or Stock Exchange News Service. And this is specific to the JSE, and it's something that's released by the JSE for the companies that are listed on it. And there's certain requirements. So whenever a company is expecting to release results, or whenever directors are buying or selling shares, or if a company makes a major acquisition, they are required under regulation to release this through the Stock Exchange News Service. And brokers and investment managers, and in fact it's available on a lot of free-to-air websites. You can go monitor this news service that comes through. And what it's trying to do is just create a level playing field, because the information that's disseminated on here can be very significant for the share and the resulting price movement of a share. So it's all released at the same time to all participants and allows everyone to digest the information accordingly. Then dual listed shares. We now saw the London Stock Exchange and the US Stock Exchange. What a dual listed share is a company that is listed on the JSE and then will have an alternate listing or another listing, a primary listing, on another exchange. So we have quite a few of those in this country. The likes of SAB Miller, who's listed both in South Africa and in London. Richemont, the luxury goods manufacturer, makes the Cartier watches. They're listed in South Africa and in Switzerland. We then also have our gold shares that are listed here and in the US markets. Investec, another one that's listed in London. Sasol in the US. So we share listings with quite a few different exchanges. And what it allows a company to do is to be able to raise capital in different markets. And it allows us to be able to invest in companies that have an international exposure. That's one way you could view it there. So a dual listed share is what those companies are doing. Sector. I think we have covered this, and if we just think back to the previous slide with the JSE, and then we looked at the industrial shares, we looked at the financial shares, and we looked at the resource shares, those are sectors or constituents or components of the overall market. So all a sector is companies that operate in the same environment and often have the same accounting standards get classed together in order to be able to make comparisons easier. So resource companies will be all your mining companies that get classed together, and we are then able to follow that sector and compare the averages of the sector to the individual companies. So for analysis purposes, the sector can become quite important, and it also allows us, as we did in the previous slide, to monitor the performance of a group of companies with one data point, which is very powerful. So we saw how resources were up 16% for the year. That is made up of a number of underlying companies like our BHP Bulletins, like our Anglos, that will dictate that overall performance. So that's where sectors come into and are quite important for us. And then the last point I want to make here, and I don't want to go into the technicalities of it, but volume. Often you have volume being talked about. If you subscribe to our update, you'll often see the last sentence in the essay section is volume traded on the day. And this is just how many shares changed hands. And you can express it as number of shares. So in a company, it could have 1 million shares were bought and sold during the day, or it can be expressed more specifically as value. So the rand amount that's changed hands. So volume is important for us to watch because oftentimes we will see a high conviction move in the market accompanied by higher volume. So more people are getting involved in a move that signifies a higher conviction. So it is one to watch. We generally are focused in higher volume trading shares or more liquid shares, and these are shares where a large number of shares are traded on a daily basis. There's sufficient volume or sufficient quantity of shares available to buy and sell at any one time, as opposed to your smaller shares that there might be a limited number of buyers and sellers at any one time. So volume gives us liquidity, and liquidity allows us to be able to buy and sell with relatively